In our last video, we gave you 5 stocks looking to own this year. This time around, we're adding another 5 stocks with some serious potential. Hold on to your seatbelts, folks. This is going to be a good one. Trying to find the next breakout stock, it's not an easy task, and to get it right can take some serious fundamental analysis. Of course, even when you have all your data ducks lined up in a perfect row, the market can still throw a curveball. Past performance is never a guarantee of future success, but when it comes with solid fundamentals, it can certainly skew the odds in your favor. Truthfully, you don't need to pick the very best stock to be in that profit circle. You just need to pick a good stock. Join the conversation. Let us know in the comments if you have a stock you are expecting to finish on top this year. Your participation is of course well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. For today's list, I narrowed these stocks down using a few criteria. First, they needed to have a return on equity north of 15%, a debt-to-equity ratio under 100%, and they of course needed to have outperformed the TSX in 2023. The idea on these criteria is to identify stocks that have lots of potential and, in the worst case scenario, still have a really good chance of doing okay. After all the data settled, I was left with a few old friends and some new ones. Today's list is sorted by their 2023 total returns, so without any further ado, let's do this. Kicking off this list, we have Topicus.com Incorporated with a ticker of TOI.V. They are based out of Toronto, and they are a technology company that specializes in vertical market software and platforms, mostly in Europe. Their price comes in at $99, and they've got a nice looking market cap of $8.09 billion. Their beta, less volatile than the market average at 0.64, and that earnings per share, it comes in at 1.14. Their price to earnings ratio comes in at 86.62, and they have a return on equity of 20.40%. The debt to equity ratio, that comes in at 53.97%. This is the only company on today's list that does not have any dividends, so we'll jump right into their returns. The 3-year return on investment comes in at, well, exactly 50%, and that 1-year return on investment, that comes in at 41.41%. Topicus is a spin-off from Constellation Software. They operate as a separate entity, but they do remain under the influence of the original CSU. In other words, they already have a plan book that leads to success. Coming in at number 4, we have Badger Infrastructure Solutions with a ticker of BDGI. They are based out of Calgary, and they provide non-destructive excavating and related services in Canada as well as the United States. Their price comes in at $42.08, and they have a market cap of $1.45 billion. Their beta, a little bit on the volatile side at 1.18, and their earnings per share comes in at 1.60. Their price to earnings ratio, that comes in at 26.25, and they have a return on equity of 17.62%. Their debt to equity ratio, that comes in at 88.71%. Switching to dividends, they have a yield of 1.673%. It's a quarterly dividend of 17.2 cents per share, and they have a sustainable payout ratio of 42.18%. Looking at their overall returns on the 3-year, their return on investment comes in at 9.36%. Add in the dividends, we do get a total return of 13.40%. On the 1-year, that return on investment comes in at 43.08%, and factoring in the dividends, we get a total return of 45.42%. Their non-destructive hydrovac excavation technology is a niche service that has demand in multiple sectors, including construction, utility, and infrastructure. This is huge, and without a doubt, they have a lot of room to grow, especially in that coveted American market. Taking our 3rd spot, we have Russell Metals Incorporated with a ticker of RUS. They are based out of Mississauga, Ontario, and they operate as a metal distribution company in North America with a very wide range of products. Their price comes in at $44.40, and they have a market cap of $2.70 billion. Their beta, a little on the volatile side at 1.51, and they have an earnings per share of 4.48. That price to earnings ratio, that comes in at 9.93, and they have a return on equity of 17.31%. Their debt to equity ratio looking good at 25.29%. When it comes to dividends, they have a yield of 3.622%, and that's a quarterly dividend of 40 cents per share. Their payout ratio, very sustainable at 34.82%. Looking at their returns, on the 3-year return on investment, that comes in at 91.54%. Factor in the dividends, we do get a total return of 111.48%. On the 1 year, their return on investment comes in at 43.04%. Factor in those dividends, we get a total return of 48.13%. There is a huge demand for metal products in various sectors, such as construction and industrial applications. This can only be a good thing for this company, as they are well positioned to meet that demand. In our almost top spot at number 2, we have Stella-Jones with a ticker of SJ. They are based out of Saint Laurent, and they produce and market pressure-treated wood products. Their current price comes in at $79.60, and they have a market cap of $4.55 billion. Their beta comes in at 0.67, and their earnings per share comes in at 5.26. That price to earnings ratio, 15.14. And their return on equity, that comes in at 18.72%. Their debt to equity ratio, it's a little high, 82.60%. Looking at their dividend, they do have a yield of 1.151%. It is a quarterly dividend of 23 cents per share. Their payout ratio, looking nice, 16.92%. When we look at their returns, on the 3-year return on investment, that comes in at 71.48%. We add in those dividends, we do get a total return of 76.73%. On their 1-year return on investment, that comes in at 67.61%. Factoring in those dividends, we get a total return of 69.55%. That's not too shabby. Stella-Jones is not a stranger to the channel, as it is one of the stocks we hold in the 0 to 100K TFSA challenge. They do cater to a diverse range of customers, including railroad operators, utility companies, and retailers, which can stoke that demand for their products for a long time to come. In our top spot at number 1, we have Bird Construction Incorporated with a ticker of the BDT. I guess in this case, bird is the word. Sorry, I did have to say that. They are based out of Mississauga, and they are a general contractor in Canada, focusing on projects in industrial, commercial, and institutional markets. Their price comes in at $14.35. They have a market cap of $771.67 million. Their beta is slightly on the volatile side at 1.16, and they have an earnings per share of 1.17. Their price to earnings ratio, that comes in at 12.26, and they have a return on equity of 22.07. That debt to equity ratio, it comes in at 54.65%. Switching over to dividends, their yield comes in at 3.036%. It is a monthly dividend paid out in the amount of 3.6 cents per share. The payout ratio on that is 29.19%. Looking at their 3-year return on investment, that comes in at 2.79%. We add in the dividends, we get a total return of 9.97%. On the 1 year, that return on investment comes in at 67.05%. Factoring in the dividends, we do get a total return of 72.01%. Holy banana bread, that's not too bad. Bird Construction is a very well-established company in the very much growing construction industry. They are involved in a wide range of construction projects, meaning they have pretty good revenue diversification. This is a company used to building profits without a doubt. I do like these stocks, and any one of them could rise to the top this year. It will be fun to watch and see if that turns out to be the case. And as I said before, with good fundamentals, they should have a decent year, even if they are not the one. As usual, if you are interested in any of these stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Keep the learning going. Watch my video on 5 stocks to watch in 2024, linked over there on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.